I'm Sam Slator from FundCalibre. I'm here today with Nick Martin, manager of elite-rated Polar Capital Global Insurance Fund. Hi, Nick.
Hi, nice to see you.
2018 was a year of a lot of extreme weather events, from floods to earthquakes to extreme heat, etc. How does that impact on the insurance sector?
Yeah, I mean, it obviously has a huge impact. As you say, the last sort of year or two have been very active in all kinds of situations, and people see every day, change in weather. It always seems to be the unusual period of whatever you want to talk about, whether it's heat or rain or whatever. And obviously, the insurance industry gets impacted by that. One thing I would say, whenever bad things happen in the world, it's always a great time for insurance companies to demonstrate to the buyers of the product that actually they provide a very, very good service, and they try and make you whole after these bad things happen. When we think about particular events, the first question that's often not asked, and it should be, is how much of that particular event is actually insured. Sadly, probably about 30% of the losses that we have for most of these hurricanes or earthquakes or flooding is the bills picked up by the insurance industry, and the other 70% is largely uninsured, and that's a fantastic growth opportunity longer term for the industry. But that's one thing we always want to think about. And even in some of the developed markets, you would think insurance would be very highly bought. But in places like California, probably 10% of households buy earthquake insurance. We've seen in the last couple of years, particularly with Hurricane Harvey of last year, that was a big flooding loss. This was a huge storm that was very, very slowly moving, so there wasn't much wind damage being caused by that, but it did lead to a lot of flooding. And in the US, flooding is largely either not bought, or when it is, it's provided by a government-backed entity. So the insurance industry didn't pick up much residential flooding losses from that. So whenever we look at these events, we have to be very mindful about how exactly they impact. And it's very hard to make sort of generalizations about how the industry gets impacted.
And are new sub-industries evolving, like cybersecurity, data security?
Yeah, to some degree. I think it's been very interesting watching the emergence of cyber over the last few years. I mean, if you look at many corporate surveys, cyber risk would be one of the main risks that company management teams identify, and it's one where the insurance industry, is relatively challenged in order to be able to satisfy, which is obviously probably quite a high demand. And if you look globally, there's about $4 billion worth of cyber insurance premiums. And to put that in context, we're talking about a $2 trillion industry, so very small in the overall scheme of things. And you have to think about insurance a lot of the time is based off of in terms of pricing, past claims history and loss experience. Well, that's quite challenging in a market such as cyber, which is relatively new. So I think the industry, quite rightly, has been quite cautious in how it's offered this product. Rating agencies and regulators have been appropriately nervous about that as well. But I think it's a great industry opportunity to really change its thinking somewhat, because up till now the industry's proven great at insuring sort of atoms, factories and things and stuff, but it's been less successful in terms of addressing customer needs in terms of insuring atoms. And we have to think about that, or insuring bits. I have to think about that going forward.
Thank you very much. That was really interesting. Thank you.
Thanks very much.
If you want to learn more about the Polar Capital Global Insurance Fund, please go to fundcalibre.com.